Good afternoon. This is Ron Brown. It's Friday afternoon. It's the 25th of May, 2021. This is my Saturday report, which I am actually doing on Friday afternoon. The market's been closed about 30 minutes, or since I have a big day tomorrow, I want to go ahead and get this out of the way. Now, rather than looking at the market and stocks, and by the way, the market is still very strong. The S&P hit a new high today because the financials were strong, and it just keeps chugging along. There's really nowhere else to put money, so it continues to flow in the market. It seems like this run will never end, and maybe it never will, but all the years I've been around, it always has ended in the past, but as we always like to say, maybe this time is different. Anyway, you're probably wondering what this mess is on my screen. Now, I have a 34-inch high-definition monitor, and this allows me to put a lot of information on the screen. As you can see, I have the warehouse here. I have a VPA chart with nothing in it other than candles and VPA flags. This chart here is my Wyckoff chart visual filter backtest. When a Wyckoff condition is met, then it generates a line. So, for example, yesterday, and this information is from yesterday, but that's fine because it helps us find stocks for today. I'm in the VPA flag, higher volume, wider spread, and intraday, and let me just open this up. And I'm in the Wyckoff demand scans. Okay, so I'm doing the intraday version of this now, and like I said, these three columns here are actually from yesterday, but if we use this scan and bring it forward to today, it's going to find the stocks that had a lot of demand yesterday and the ones that are following through. And you can see what's on top here is Jinko Solar up 13.58% today. It closed near the high of its intraday range. I'll just bring this stock up, and I'll come back and take you through this. So these charts are all linked together. You have to have a pretty decent machine computer for this to work quickly, but mine works just fine with this load. So what I have over here is I just have a daily line chart. If I want a weekly line chart, I just quickly drop down to this one. The reason I've gone to a line chart for one of my charts is it really shows support and resistance much better. It also shows higher highs and higher lows. So you can see support across here, and then here would be a higher high. I mean a higher low, which is really established when that area is taken out. Here's the high, here's a higher low, which is established when this is taken out. This would be another higher low here, very short term. But you can see how easy it is to see these. Now, short term, this would be, here's your high. This would be a lower high when this area is broken, and then it comes down here and finds support. Now, for this high to be taken out, for this to be a higher low again, this area would have to be taken out. But you can see it's much easier to see it on a line chart with closing prices. And then finally, what I have down here is I have my volume point of control chart. And the reason I decided to stick this in, I wanted to see where the resistance levels possibly are on the volume point of control, and you can see this has been very choppy. These lines, if you look up here at the left, 90 days is blue, 30 days is red. 10 days is brown, and the blue and the red just happen to be overlapping here. So the 90 and 30 are overlapping. So most of the trading over both of those time periods went on in this area because the lines are here. Now, if they're, this tells me if the VPA on the 90 is positive or negative, on the 30 and on the 10. And you can see how choppy this has been. The brown line up here represents the 10-day volume point of control also. So when it started moving up here, and that date was Wednesday 5/19, it crossed over the volume point of control. Let's go in here and let's look for the 19th, which would be right here. You can see that this Jinko Solar came down, was in a short-term downtrend. It was showing no supply on these, but the trend was down. And also, if you look over here while it was going down, you can see on the pink line here that the 10-day volume point of control was negative. Now, I know I've got a lot on this screen, but it actually works quite well. So this right here would be represented by this area here. And then as we get down in here, it's kind of hard to tell. Well, support is pretty visible, but it's hard to tell where the higher highs and higher lows are. Yes, you can see them, but it's just so much easier to come over and look at this chart. And at the same time, what I say that that date is, it's the 19th. Let's see where we are on here on the 19th. Okay, here's the 19th, and we were getting a yellow bar, which means, using the Wyckoff, if I make this full size, and if you look up here, yellow is a narrower price spread, lower volume, which means lack of supply because the stock has been under accumulation, and that's when it started moving up. And let's go back over here. Right here would be the 19th, and you can see that it started moving up, and also you can see that the group was moving up at the same time. So I hope you're seeing that all of these work together. Now what I have here is, of course, just a price and volume chart, but I also have a VPA, volume price analysis signals. We have clear visibility on the volume, and that allows us to see how much volume took place on these VPA days. This day right here, volume was a little bit higher, but it closed in the upper part of its range, and we got a strength seen returning from a downtrend. Support is right here, no VPA flag, but volume was pretty low. It just means that there were not a lot of sellers in here at this point, and then it started taking off. It gapped up here and it pulled back, and we had some no supply signals. Even though these are black candles, notice that this did not take out the low of this white candle, and look how quiet the volume was. I'm going to draw down here, match these up for us. So you can see on these 3 days down here, volume was extremely quiet, which indicates that there was very little selling. And then I got part of this candle in here, and you can see the volume was picking up as the stock moved higher. Now it got up to this point here. Let's just draw this on these two as this sold off with an effort to fall. The volume was not really that bad, and then what happened is we had a hammer here, no VPA flag, but just looking at it visually, and with the volume level, this closing near the upper part of its range, this suggests that buyers were stepping in. Then we had some down days here. No question about it. And it was a pretty good sell-off. Now you can see that it did not close at its high, so there was some selling going into the close. Traders tried to keep it propped up the next day, but it didn't work. Here's the volume right here. Volume was lighter, closed in the upper two-thirds of its range, but the next day it took out the low of that day, which would have been a great place for a stop if you had gone long, if anybody had gone long. But we want to be going long down in here, starting to look for these signals which are indicating that volume is drying up and the candles are closing near their highs, and avoid chasing these stocks. So it fell several times, and you can see that well, it's kind of hard to see, but let's see. Here's this candle. When this candle broke down, you can see that the VPA went negative. Now I don't have a 3-6 crossover chart up here. That's easy to do, but I'm just concentrating really on volume price analysis, the volume point of control, support and resistance, higher highs and higher lows, and the Wyckoff signals, which indicate strong buying. Now let's go back to this right here. Look at the volume yesterday on this. This was an inside day, but this had to come lower here. Volume was below the moving average, but yesterday it shot up on this kind of a spinning top. So that tells you right there that buyers are coming into the market. It would have been nice to have it close a little higher in its range, but it's a white candle. It opened here, traded down to here, closed here, but got this high, and then look what happened today. It opened, it gapped lower today, but buyers stepped in right away, and volume was heavy today. But the telltale sign here was the demand was showing up in the Wyckoff view, and that would be represented by this high volume, above average spread, and a mid close, which was right there. Now you can see that the 3 and the 6, and this is where the warehouse view comes into play, has been negative for 7 days, and the VPA has been negative for 3 days. But what happened today? The VPA turned positive. I'm sure the 3-6 did not turn positive. But anyway, it's amazing how much information we can get when we really start looking at this through the lens of volume price analysis, volume point of control, support and resistance, higher highs, higher lows, and then bringing the Wyckoff demand supply into play. Now I just picked this stock because it was at the top of the list. Let's go down and look at another one here. Looking at this, you can see that the 3 and the 6, before I bring the chart up, 3 and the 6 been positive for 12 days. The VPA has been positive for 15 days. It was up 11.27%. Last price is only $3.95, closed at 100% of its range. Trades 1.27 million shares. It's a biotech. Stopping volume was 4 days ago. So let's look at this. This column here is the days since the last VPA. So with all that information in mind, let's bring it up here. So here's your stopping volume. That was 4 days ago. Volume following that was pretty light, but the stock was moving up. Now let's go over here and look at this. Here is the stopping volume signal. and no demand signal here, but on this day, which is right here, there's no VPA flag, but this is where the Wyckoff comes in handy. The way it's set up, or I've set it up in HGSI. Matt gave me the ability to do this, but I added, or I did all the filters and added the VPA. So what is this? Cyan. Just open this up, and it tells me that it's a narrower price spread on higher volume, which indicates demand. So this is a narrower price spread than some of these others. You can see that it's much narrower than that. But the volume was light, but it closed near the high of the day. So what does that tell us? It tells us that there is demand for that stock, even though volume is light. Just because a stock does not have to have high volume, you have to take necessarily have high volume. You have to take the range of the candle, the high-low open and close, or the close, especially if it closes high in its range. It means that there is demand for it. But I got this information from this chart. Now here's the intraday information today, of course, and let's take a look over here. Now it was coming down, which is down here. See how easy it is to look at the line chart? Just going to put a chart here. What happened? It had a low, and then it moved up, and then it had a shakeout. This is where, I don't know how much smart money is in here, but it trades a lot of shares, and this would be a shakeout. Those who bought on this right here were shaken out on this. Notice once again how much easier it is to see the line chart, and then it started taking off. This is subjective, of course, but this low here, I'm going to do this. I'm going to draw this across here. And really, I would say, here's a higher low here. Up a little bit. But it depends. If you consider this a low, this could be a higher low here. But when it got past here, it formed a higher high, and then this would be a higher low here, the way I look at it. Like I said, this can be subjective. But at least I'm training my eyes on this now. Now looking down here at the volume point of control. I want that to be an arrow, but you get the idea. Look where the VPA turned positive on this stock. On this would be the 10, the 20, and the 30. And it remained positive. Now let's go in here. Here's the stopping volume. Turned positive on this day. Let me make this larger. On the 10, and then it was confirmed on the 30 and also the 90 right here. And you're saying, well, the 30 and the 90 are up above here. Well, this is today. If I scroll back, let me see if I can scroll back here. I don't have enough to, oh, I see, I don't have enough data. Let's do it this way. I'll have to resize this. Get it over here. Now I should be able to go back. So as I go back here, notice how the volume point of control lines dip down here. All three of them are together or nearly together. So there are all the trading activity, or a lot of the trading, or most of the trading activity for the 90-day volume point of control, the 30-day volume control, and point of control, and the 10-day all happened in this area right here. So there's a lot of buying going on, right? And then when it took off, they all turned green about the same time. So I'm putting all of these elements together. By the way, most of you know I'm going to be going into the hospital for 30 days here coming up, and to have CAR T cell therapy, which is brand new for multiple myeloma, and I'm really looking forward to it. Anyway, when I get out, I'm going to work on this while I'm in the hospital. I'll have a lot of free time, obviously, and when I get out and when I feel up to it, I'm going to do an online webinar series and incorporate all of this together, or bring it all together for all of us, because I've been working, as you know, for months on my files, getting them where I want them as far as the warehouse for sure, getting the 3 crossing the 6 over here in the VPA and the volume or the VPA signals and so on. But now this is all coming together. Okay, let's do another one. What's the price on this? That's another cheap stock. Now let me find one that's a little more. Let's do this one. PubMatic. Don't know anything about this stock. Cloud infrastructure platform. Okay, so here we go. Let's look down here to begin with. Yesterday was very high, above average. Closed at the high. The days since the 3 crossed the 6 is 12, with 0 being the crossover day. Crossed the VPOC again 3 days ago. And it's up nearly 5% today at 96.21%. Volume was above average, traded over 1 million shares, and an effort to rise yesterday, which you can see right here. Now let's go back in time. Let's go back to this area here to see what we were seeing. We were seeing a lot of VPA flags. Here's stopping volume and strength returning, or no supply, I'm sorry. A sign of strength that says it right up here. No supply. Here's another stopping volume. Closed near the high of the day. Notice as it was coming down. Here we got a stopping volume, even though, well, it's above the 90-day moving average. The bar isn't as high as this bar. They're still dumping here, but we're starting to see some accumulation here. Strength seen returning after a downtrend. And here's that other stopping volume, and then we get an up bar closing near its high. It confirms the return of strength, and the stock started moving up. Those who chased it got hit with profit taking here. So let's think about this in terms of demand supply. There's more demand than supply as these stocks start going up. What's the effort and the result? Here's the effort. The result is a bar which did not close near its high. If I put that right on there, and if we look here, volume's very high, the spread's narrow, the close is mid, but the sentiment is bullish. So this is effort, and here's the result. It didn't close at its high. Now let's look at this one right here. A no VPA flag. Volume very high, spread above average, but it closed down. Now it didn't close down below this one, but it closed down in its range from the high. So what happened here? Profit taking on heavy volume. When it looked like this is going to go, it's so easy to try to chase these, and then you end up with this. And what happened next? It came here and consolidated. Now, according to Wyckoff terms, this could be considered building a cause. It's a short-term cause. You like to see long-term causes, but I'm going to just call this building a cause right here, because it is building up energy. If we're looking at fractal energy trading, this is building up energy to go one direction or the other. We don't know which direction it'll go, but when it breaks out of this box, we know that it's going higher. And I'll get rid of this. Let's just take a look at this. This is no supply. And then we got another no supply on the same day, a pseudo upthrust. Had an upthrust but closed near its low. The next VPA flag is here. No demand, a sign of weakness because of the low volume. And what happened? It went down for a couple of days. Here's no supply, low volume, and here is a test. Low volume, but it closed in the upper part of its range. It's a low volume test. And here's the confirmation of this test. This is often a really good place to get in these stocks. And it took off from there. This bar here represents what we see down here. But lots of instances. Now let's go over here and look at the Wyckoff VFB. You can see that even though there were some VPA flags here, but it's suggesting here that the stock is under accumulation, and then we had these two down days, but we're getting VPA flags on them. And then it takes off. If you click on the bar and look up here, it says volume high, spread narrow, close very high, sentiment bullish, and it took off from there. Now let's go over here. So here's the low. Anybody who bought, let's see, what's the date here? 5/26. Let's match it up over here. Looks like it was getting some support here, but it was still in a downtrend. And so it went down, and there was a shakeout here. This is a shakeout, the stopping volume and so on. And then it turned up. We can see it turning up here. And this would be, I'm going to put a line on here. Okay, here's your low. When it's got if it breaks past this resistance here, you can see it went up to resistance. Much easier to see on the line chart than it is over here. And here's a higher, I would consider this a higher low, because it came down and then, that's subjective. This could be the higher low right here, but then it came back down and formed a slightly lower low, and then it broke past this area here to form a higher high. Like I said, this is a kind of subjective, but it helps. It helps me anyway. So let's look at this one here. Where are we here with the volume point of control? Make it full screen. Okay, you can see the VPA flags down in here. I'll zoom in on this. And we're getting the same VPA flags, and then what happens? The VPOC goes over, closes over this line here, the 1010, so that the volume point of control is positive. It stays positive until this dip below the line. And this, the 30 confirmed, and then the 90 confirmed, and the 90 stayed positive here in the green, even with this little dip here. Now I'm going to swap this chart out here for this, and I just wanted to look at the 3 versus the 6. Let's make this full screen. I don't think it came down and touched it, but you can see it didn't quite go through it. So if you're using the 3 and 6 as a stop, it did not penetrate that stop. So It's what's great about HGSI is all these charts. We can get a totally different look at what happens just by going from chart to chart. Well, I'm not going to go any longer on this. I just want to show you what I'm working on. You can set up a similar screen yourself, or if you have enough real estate on your screen, and start playing around with this. Like I said, I'm going to be working more and more on this, especially looking for these areas here where we can start taking trades when the stocks have sold off and it looks like they're getting under accumulation. With the combination of VPA, candles, volume, well, that's VPA, and the Wyckoff plus the VPOC and a line chart, it just makes it a heck of a lot easier to see what's going on. And let's, of course, not forget the warehouse, which gives us a tremendous amount of information. Anyway, thanks for listening. I hope you enjoyed this, and this is the direction I'm going in, trying to get us into trades much earlier. You can see what happened here. I'm going to finish with this. Here's the higher, low, and so on, but a trend line had started developing here. It's doing all. I didn't want to do that. The low, and then you get this. The trend lines are movable, of course, but when you get that test, you can see that this trend has started up. But trend lines are also, as you know, very subjective. So you have to be careful. I prefer to use what I have here, most of it based upon price and volume. Once again, thanks for listening, and I'll be around for a couple more weeks before I go into the hospital. I do have some back and forth to do between here and Omaha, but I'll still be around, and I'll be working on this. Hopefully we can do a webinar, and if I'm up to it and if I have time next week, I'll try to schedule one on Thursday. I'm not promising that because I don't know exactly what's happening with my schedule yet. Thank you.